want to talk about, Biden's tax bill, infrastructure bill, is being announced, and a lot of things in there which are pretty crazy. Now, listen, Biden said, one of a few presidents said, listen, I'm raising your taxes, right? And got elected. That's cool. That's fine. I think the corporate tax rate from 21% to 28% was kind of expected. We knew that. I didn't think he wants to impose a 15% minimum tax on big companies. There's companies that like Amazon who just poured all their profits into growing the company, and now they have massive profits. But, look at 10, 15 years, you're automatically going to make these people pay a 15% minimum, because if you're looking at that, I tell you, if you own AT&T, NVIDIA, Adobe, JP Morgan, Intel, Target, these guys are going to get nailed. And that is not factored into their price. So a lot of these guys pay less, but 15% minimum, and there was research done, I think it was in Barron's, and they said over a third of the companies at the 100 largest U.S. companies are going to be on the hook for that 15% tax. And, I don't think that's factored. So that's what we want to do from an investment perspective. I don't care what you think, if you hate Biden or you like Biden. I'm saying from an investment perspective, that was a surprise. And also, Daniel, imposing a global minimum tax on profits from foreign subsidies. I didn't see that one coming. So companies, it says, with a large portion of income from overseas or those who pay effective tax rates below 21%, data storage companies are like that, like Seagate Technology. You also have Las Vegas Sands, and Goldman Sachs said Las Vegas Sands foreign income exposure at 83%. A lot of these companies generate, I think it's over a third of their profits overseas, and now they're going to get taxed, through that as well. And a 15%. You're looking at a lot of crazy stuff here. Stuff that is going to hurt profits. Stuff is going to result in, if you're not generating as much profits. What does that mean? You're not going to be hiring. You're not going to be spending much CapEx. I don't know if that's really factored in right now to, this stocks trading at all-time highs. We saw that in 2018, Dan, when the market really was stagnant. We didn't really see earnings growth from 2017, and then Trump had the corporate taxes, and notice how earnings exploded for these corporate companies.
Yeah, absolutely.
And they started paying out like checks to people, to employees and stuff like that. But, again, you could argue, well, they're using it for buybacks or whatever, but it definitely helped these companies. And there's no denying that the earnings growth that they saw because of that was huge. Now you're going to take that away. You're going to take a lot of that away, and then you're adding more taxes, and that results in companies hiring less, hiring fewer employees, the CapEx going down. I just don't think a market at its all-time highs right now, I don't know if that's really being factored in of how these taxes are really going to, because that caught me by surprise. The 15 minimum, and also the global minimum tax on profits from foreign subsidiaries, that caught me by surprise. Maybe it didn't catch some people by surprise, but even the research reports that I'm reading, it kind of caught them by surprise too. But I wanted to get your thoughts on it, but those are the biggest things that I saw in that.
It's funny because the 15% minimum tax, I'm reading off of White House fact sheet, 15% minimum tax on income corporations used to report their profits to investors, known as book income, will backstop the taxpayers. The 15% minimum and the multinational, to be honest with you, I have no idea what those means, and you don't need to right now, because it's going to change dramatically between now, announcement time, and by the time that these corporations and lobbyists get to go back and forth with voting members and everything. I think you're right on it's not priced in right now, but I don't think it's going to be for some time. You have a lot of momentum, consumer confidence going well, stimulus checks are going out, so we got at least a few months of looking forward. This isn't going to pass until, later this year at the earliest. It's not going to go into effect probably until next year. That'll give the market plenty of time. The downside for us as consumers is that, you're right, CapEx is probably going to go down, hiring could see a hit, but prices have to rise. Because if you're a corporation, your taxes go up, you're not just going to say, all right, everybody has to deal with less. You're going to have to try to offset that and keep growing. So that's the downside for consumers. The biggest beneficiaries on the Trump tax cuts, it's not that big of a leap to think that they're going to be the biggest losers on some of this, depending on how management navigates that between now and then. So I think you're right. It's not priced in, but I don't think this is, I can't believe I'm saying this because of this taxes and this ridiculousness in this, but this isn't anything to worry about right now. It will be at the end of summer as they really start hashing out details. But, it's fun to look into now, but this isn't even done yet. And this is going to change so much between now and the time that they vote on it.
No, I agree. And also we're looking at the infrastructure, right? Over $2 trillion. It was $1 trillion, right? 4 years ago when Hillary Clinton and both Trump ran on $1 trillion. But what's another trillion? Let's just throw another trillion out there. Who cares these days? It means nothing. So And again, politics aside, they're going to be some really, really big winners there. I mean, you're looking at EV companies. I don't know if you saw the charging stations and things like that. I think if we're looking at stocks on the infrastructure side, Terex is one we have in our portfolio. We're up a lot, triple digits in that one. We were very early party in that one. That's going to benefit. Caterpillar is probably going to benefit. Again, names that are up huge. But I don't think this is factored in too much. GE,
U.S.
Honeywell,
Concrete. Oh, sorry.
U.S. Concrete.
They're getting a pop today. That's a good roll up. They buy companies to vertically grow, meaning they're all over Texas, California. That'll be interesting to watch. I've been a big fan of that. Now it's an all-time high, so I look silly, but it's just roll-ups. You got to be careful with roll-ups with interest rates and stuff. So
as long as interest rates, roll-up guys are just they buy companies,
but they have a huge runway ahead of them. With if any of this infrastructure stuff goes through, I mean, you're going to need concrete, you're going to need building materials and all that. So.